Welcome back. Even as India's investments into equities has surged in the past 2 years, supply of equity has matched demand, rupee for rupee. That's according to the latest report from Ashish Gupta, the CIO, Chief Investment Officer at Axis Mutual Fund. He says while about 5 trillion rupees has flowed into equities from mutual funds since April of 2022, secondary market sales by promoters PE since the same period, April of 2022, has been at 4.42 trillion. The report is titled Let's Talk Supply Too, and in that he details the amount of equity supplies that's hit the market. Interesting, right? Both of them evenly match demand and supply.
Absolutely. We all are very happy that mutual fund SIP flows as well as non-SIP flows, the equity part of EPFO, pension, infrastructure, insurance is all brought something like 5.5 trillion, he says. But 4.5 trillion has also gone out because of sales. And look at the table. Let's pick up multinationals, promoters, and, okay, first multinationals. They have sold about 12,000 crore in 23. 24, it went to 46,000, almost 47,000 crore. And 25, just FY25 in the first quarter, it is 27,000 crore. And you remember all the big names, Whirlpool, BAT, Hyundai is coming, LG may follow suit. Then let's look up the promoter sales. Promoter sales was 45,000 crore in FY23. Last year, 82,000. This year, just in one quarter, 30,000 crore. And we know all the big names. Remember, even TCS sold. Then there was Bharti, Indus, a whole lot of promoters, Polycab. And then the PE sales, of course, 83,000 crore already in FY23, FY24 almost 80,000 crore, and FY25 just in the first quarter nearly 36,000 crore. And again, all the big names. Bain moved out of Axis, you remember. Then BlackRock, if I remember right, moved out of Embassy REIT. Then all those Tiger Global, SoftBank moved out of all the e-commerce, Zomato, Paytm, Policy Bazaar. So that was a huge amount of PE money going out. Now, two major points that Ashish Gupta makes in the report. One, not much has gone for capex. See, 91 IPOs in the last 15 months raised 80,000 crore. Of that, 61% was actually offer for sale. Promoters took away the money. Of the balance, about 40%, 25% was for deleveraging, working capital. 8% was increasing capital by NBFCs to on-lend. And only 6% was for capex. I mean, not to worry, companies have even internal earnings, but just that the money raised is not going for capex. And finally, he says the equity deluge is not ending anytime soon. So next quarter, that is July onwards, the IPOs are 3x what was raised by the IPOs in the first quarter, in April, May, June. And actually, there is a number, if you look at the draft prospectuses and already announced IPOs, it works out to 93,000 crores being taken out of the market in just the next few months. Besides this, PE, private equities, which hold stakes in listed companies and those which have already hit 3 years. 3-year vintage, normally they want to sell out to give money back to their fund, their contributors. That is 2.17 trillion, 2.17 lakh crore could go out. And this is only listed. Unlisted companies, they have some, 4.6 trillion rupees, of which the 3-year vintage is 3.67 trillion. And that can come via IPOs at some point in time. So the deluge is not getting over. Inflows are coming, but there are outflows lined up.
Okay, all right. Thanks a lot, Latha, for joining in and detailing that note. Appreciate it. Well, let's